Every Monday to Friday, this is Peter Lewis's Money Talk.
Money Talk.
Good morning. It's Tuesday, the 25th of June. We're almost at the end of the first half of the year. This is Peter Lewis with a roundup of today's business and finance headlines on Money Talk. And this podcast is sponsored by Surfing Group, which is headquartered in Singapore and offers online financial services to 50 million customers across 10 countries. In today's business and finance headlines, China is urging the European Union to revoke its decision to impose provisional tariffs on Chinese electric vehicles after both sides agreed to begin consultations. The EU's anti-subsidy investigation into Chinese EVs has prompted provisional duties of up to 38.1% on Chinese EV imports, which are set to take effect by July the 4th. The Global Times said that the ideal outcome for China is that the EU adheres to World Trade Organization rules and revokes the tariff decision by the specified date, which would benefit both sides. Taiwan's President William Lai has requested that the country's constitutional court suspend the controversial legislation that expands the powers of parliament. The bill, which was pushed through by the opposition nationalist Kuomintang and the smaller Taiwan People's Party, grants lawmakers the authority to require the president to give regular reports to Parliament and answer lawmakers' questions. Additionally, it criminalises contempt of Parliament by government officials. Mr. Lai said the amendments undermine the constitutional separation of powers and put citizens' privacy rights and companies' trade secrets at risk. A Hong Kong court has given Chinese developer Kaiser Group 7 more weeks to work on its debt restructuring plan in order to avoid being liquidated, but also warned this might be the company's last chance. Judge Peter Ong warned the company would have no excuse for a lack of progress in its offshore debt restructuring. A sell-off in small-cap Chinese stocks deepened on Monday as regulators remain focused on shoring up the valuations of larger companies. The country's CSI 2000 index of small-cap stocks tumbled 4% yesterday, bringing losses for the year to date to 25%. In a moment, I'm going to talk with Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Also with us is David Roche, President and Global Strategist at Independent Strategy. And in Washington, D.C., our US economics correspondent, writer and broadcaster, Barry Wood. And you're welcome to join in the discussion. If you want to get in touch, please go to my website, peterlewismoneytalk.substack.com.
Peter Lewis's Money Talk.
On Wall Street's Monday, US equity benchmark indices were dragged lower by several big tech stocks, including Nvidia. The S&P 500 slid 0.33% to 5,448. Information technology was the biggest declining S&P 500 sector for the day, falling more than 2%. The tech-heavy Nasdaq Composite declined 1.1% to 17,497, and that was the worst day since April for the Nasdaq. The Dow outperformed as investors sold big technology names in favour of other sectors such as banks and energy. The 30 stock index rose 261 points, or 0.7%, to 39,411. Shares of Nvidia fell another 6.7% Monday, taking its slide since last Thursday's intraday high, when it was briefly the world's largest company, to over 16%. Nvidia's market value on Monday fell to just above $2.9 trillion. That's down by around $500 billion from Thursday's peak. Benchmark Treasury yields fell slightly, with the 10-year yield settling 2 basis points lower at 4.23%. The 2-year yield was off 1 basis point at 4.72%. The US dollar index was 0.3% weaker Monday, weighed down by month-end selling. On Monday, the yen was trading at 159.62 to the dollar. That's close to the 160.17 34-year low, which was set on April the 29th, which led Japanese authorities to conduct record intervention in late April and early May in the FX markets. The weak dollar helped support gold, although it still remains well down from Friday's highs. It was 0.6% higher at $2,333 an ounce. Brent crude oil settled 0.9% higher at $86.01 a barrel. Bitcoin dropped 7.5% on Monday, its biggest one-day drop since early March, and extending a sell-off that's seen the volatile cryptocurrency lose more than 16% of its value since early June. The price of Bitcoin dropped below $60,000 to $59,300. That's down from record highs reached in March, but still up almost 37% for the year so far. Mainland stocks sank to 4-month lows Monday amid ongoing capital outflows in China as macroeconomic data continues to disappoint, while the lack of forceful policy support measures also dampened sentiment further. Data showed that foreigners turned sellers of Chinese assets this month, pulling out about $4.5 billion via the Stock Connect scheme with Hong Kong. The Shanghai Composite fell 1.2% to 2,963. That's the lowest level since February the 29th, and putting the index into negative territory for the year, down 0.4% year to date. Hong Kong's Hang Seng Index was unchanged at 18,028 for 2024 so far. The Hang Seng is up almost 6%, but the city's benchmark index is now down almost 9% from the 2024 peak, which was hit last month. The tech index was down 0.7% on the day, taking its losses year to date to 2.3%. And futures markets pointing to a gain of 60 points at the open for the Hang Seng should start trading just below $18,100. And you can get more details on the latest market movements in my daily newsletter at peterlewismoneytalk.substack.com.
Every Monday to Friday, this is Peter Lewis's Money Talk. Peter Lewis's Money Talk.
Let's welcome our Tuesday morning guests. We have with us Mark Michelson, Chairman of the Asia CEO Forum at IMA Asia. Morning, Mark.
Good morning.
And also with us, David Roche, President and Global Strategist at Independent Strategy. Morning to you, David.
Hello, everyone.
And over in Washington, D.C., as we always do on a Tuesday morning, we like to speak to Barry Wood, our US economics correspondent, also writer and broadcaster, and is also weather forecaster as well. What's it like over there in Washington today, Barry?
We need rain. It's very dry, and we've had record heat, so it's a mixed bag here, but on balance, it cooled off a bit today. So today was very pleasant. Good morning.
Good morning, and thank you for the update. Sounds summer has arrived in Washington. Let's talk about elections to kick off. We've got 3 key elections coming up, and on Thursday we've got the first of the US presidential debates. President Joe Biden and his challenger, former President Donald Trump, will stage a 2020 rematch. Neither of them has been on a debate stage since their last showdown back then. The debate begins at 9 o'clock Eastern Standard Time on Thursday, takes place live on CNN with no studio audience. The network says it's going to last 90 minutes and include 2 commercial breaks. Unlike in their previous showdowns, which, if you remember, were rather ugly and heated affairs, with the pair frequently talking over each other, the candidates will have their microphones muted except for when it's their turn to speak. That should be a relief. Might be a good idea if they muted it for the whole 90 minutes. It will be the first of at least 2 debates between the candidates. The second one's scheduled for September on NBC News. Now, just out of interest, this is the earliest televised US general election debate since they first started back in 1960. It comes about after the Biden campaign complained that the 2020 debates took place too late in the cycle when people in some states had already cast early ballots. And Barry, this is a tight election, isn't it? According to the polls, it could be decided by maybe a few thousand votes in a few key swing states. So does this have the potential to change the direction of this election?
I think it does. Yeah, this is important. You mentioned the first of these televised debates. That was black and white television, 1960, and Richard Nixon against John F. Kennedy. But the real news at that time was that Vice President Nixon, his afternoon shadow of his whiskers seemed to overshadow his general presentation, whereas Mr. Kennedy was suave, New England, lots of hair, and he won. So then you had an election, you had the debate in 1976 when Jerry Ford had taken the place of Richard Nixon, and Jimmy Carter said something about Eastern Europe. And Jerry Ford made the mistake of saying, Poland is not really under the thumb of the Soviet Union, which of course it was. And some say that cost him the election. So I think you fast forward to 2024, this is an important debate.
Is there going to be a lot of focus on their age? Because they're both pretty elderly, aren't they?
They are. But I think Joe Biden is good at giving speeches that go on for 30 minutes. So he should be all right with 90 minutes of debate time with a couple breaks in there. And Donald Trump, I think his test is whether he can be civil, whether he can be restrained. And neither one of them wants to make big mistakes. It's going to be fun.
And I'm wondering, because this is going to be unusual for Donald Trump, because he's used to big rallies, isn't he, with lots of audience there. This is going to be in front of no audience at all, just the two of them. That could be a bit of a test for him, maybe.
I agree. It's different for Donald Trump, and I think he has the most to lose in this debate. We shall see how this all turns out. Joe Biden, on the other hand, just has to avoid making, verbal gaffes, and he's pretty good at that. So I think Joe Biden will win.
So, Mark, if we look at this election from afar here, I mean, clearly it's going to be critical for Asia for a number of reasons, isn't it, in terms of who wins and their policies here. So what should we be looking out for as the key issues from this debate?
Well, clearly, from our perspective, it's important if trade comes up and if China comes up, which may or may not. Not that there's a lot of daylight between the two, but they have different emphasis. And of course, former President Trump has been talking about raising tariffs and 60% or whatever number he's using from time to time. But President Biden clearly has imposed tariffs as well, and just imposed new restrictions on China trade. It's not a major issue unless they stray from that. I'm a little less sanguine than Barry about President Biden's the risks he faces in this. Although the expectations have been turned down, and Donald Trump sometimes helps in doing that, saying he's in a log cabin, sleeping and taking drugs, which he may or may not be. But nonetheless, he's still got to show that he's got some vigor. He's done that in the State of the Union addresses so far, but this is a little different. And we haven't seen either of them in this situation in quite a long time. Trump did not participate in any of the debates in the primaries, which he did 4 years ago, and he did 8 years ago, which is sort of testing, right? And sort of gives you some experience. And President Biden has suggested it, hasn't been doing it in a while either. So, it's not just slip-ups, it's impressions. And part of it is age, part of it is what issues they're able to focus on. The economy clearly is an important one to Americans, and Biden will say we've done very well, and Trump will say the opposite. Biden will focus on abortion, see how much traction he gets from that, because that's a big deal for him, and of course democracy, which we just talking about France and it should be the United States too, and how important an issue that is. Trump sort of dismisses that. Has been pretty successful at motivating his base to not be particularly concerned about that. So we'll see.
And I presume immigration will also be another big issue, which is Biden's Achilles heel, isn't it?
Yeah.
You're right. Yes.
Sure.
David, we're looking from afar. I mean, how important is this? Did you think we're going to learn anything about policy? Are they going to get down to the nitty-gritty of what exactly they're going to do if this is going to be policy? Because of the last one in 2020, it didn't really, did it? They just hurled insults at each other and shouted over each other most of the time.
I don't think we'll get anything on policy that's new, because we know what each of them does. And Trump does whatever he thinks like when he gets up in the morning. And Biden has got, he's much more institutionalized. The concepts, for me, that will be on display are isolationism versus internationalism, which I think are the two trends in U.S. politics, which will outlive the present candidates, which won't take long. And now, as regards winning and losing, I actually think that it'll be behavior. If one or the other shows what I call dother, which is kind of like me getting the bus, dothering, that's fatal. And secondly, I think if Trump shows something as small as this. He cannot control himself when his microphone is switched off and he starts to rant like a recalcitrant baby in the corner of a birthday party. Then I think he would lose, not with his own kind of constituent voters who don't have any real criteria to set their own behavior on civilized terms, but with the general public. So I think a lot will come down to the factor of, dotheriness and can you control yourself?
I listened to a couple of excerpts from Trump's speeches because I had nothing better to do the other day, and it's amazing. You get the headlines, the sound bites, but when you listen to 10 minutes or so of Trump, how much he rambles and meanders and drifts off the subject. It's sort of like you don't really see it unless you go to YouTube and download one of these rallies he does and one of these speeches he does. And I'm wondering if he does that in the debates, that could be pretty fatal for him.
I don't know.
I think he could.
Personally, I think he could easily do that. Sorry, Barry, I interrupted you there, but I think
no, not at all.
It doesn't matter to his supporters because they can't speak English either. What you're actually looking at is anybody who might possibly be persuaded to vote for Trump. And they might be put off by what you say, but his own voters, are exactly the same.
Look, you're right, David, and you're right, Peter. Trump, rambles and goes off the subject, but let's not forget he's a master of this medium. He always comes back to some, not synthesis, but some concluding line. Like he'll see Bill Smith. Bill, your wife. One of the greatest people I know. And that disarms so many people who are critical. So in that sense, what he learned with The Apprentice as to this medium really has made him a success at television. But this debate is not really television, is it?
It's an
I agree with Barry and David. I think that's key. And former President Trump is very good at this. He also doesn't care about the facts, and there are often fact checks and so on. But I don't think it doesn't seem to hurt him. Not only with his supporters, it just doesn't seem to be a high priority for most voters, even if it's some things outrageous. But it'd be interesting to see if there's a line that you can step over, and if there is, he steps over it. I don't know that there is one.
Well, let's move on to the French election. This is a bit of a wild card because we weren't expecting to be talking about a French election until about 3 weeks ago when Emmanuel Macron suddenly called a snap election after his centrist parties lost very badly in the European Union elections. Business leaders are calling for calm ahead of the election. The chief executive of Euronext, which is Europe's biggest stock exchange, said that the plans of both Marine Le Pen's far-right Rassemblement National, RN party, and this new left-wing alliance were a concern for the future of the economy. And the French finance minister had previously said that this economic crisis could become a financial crisis if these extreme parties get to power. David, how much could this be a black swan event here and have some real implications for the financial markets?
I think it's very likely. The two extreme parties will obliterate Macron's party, which is called the La Renaissance. And they'll obliterate it because it isn't even a party. It's an organization which supports Macron, but it is not an institutionalized party in the traditional Mayor Daley sense of the term, where you could win pretty well any election forever. So he's going to get obliterated because the anti-presidential feeling in France is red hot. It was there way before he nuked the center ground with his declaration of election, but it is now much, much worse. Now, why does it matter? Okay, it matters for this reason. We need in Europe a large amount of reform. We need in France a huge amount of reform. It's not just that these extreme parties are intending to spend an extra between 2 and 4% of GDP on pretty wild projects. It is because the French economy is not growing. It has no productivity. and Europe has no productivity and needs a huge amount of radical surgery. They also need to handle all the question of enlarging Europe, embracing Ukraine, and I can go on. There are about 7 pillars of reform that need to be done. If France becomes populist, it will become internally focused. We will not get the Commission we need. And essentially what will happen is that European initiatives will die on the branch. And frankly, Europe is sliding backwards at such a scale at the moment that unless that course is reversed, and it is reversible with the 7 pillars of major economic and political reforms, if that is not done, then the outlook for Europe, even as a defensive bastion against the Russians, is very poor. Now, okay, I will add one final boring chapter, and that is the French road to extremism is complemented by the German road paralysis, political paralysis. 30% of the German people support the current coalition. I think it is 70% of people think that Scholz is a natural-born loser. But you can't change the government, because after a certain rather unfortunate history of events in Europe around the 1939-45 period, the Constitution was written in a way that prevents the fall of any government in Germany during its term of office. So you're stuck, and Scholz is stuck because it's the best job he'll ever have, all right? So the Germans cannot actually move Europe out of paralysis if the French enter into narcissistic staring at their own navel and worrying about the true essence of Française, which I think is what's going to happen. So, long speech, but that I think is the danger.
David, do you think that there could be a Eurozone currency crisis a la what happened with Greece if the populists win?
I think it'll go in steps, Barry. The first thing is that French bond yields, which are trading at the moment 70 basis points, 80 basis points over Germany, will go to 140. Okay, that then sets off the fact that the French primary budget deficit at the moment is between 3 and 4% of GDP. And these turkeys, Turkey left, Turkey right, apologies to turkeys, which are vaguely intelligent animals in France, if they get into power, they will actually increase that deficit by they'll probably double it. Okay, so the European Union has already told France, you're on the excessive deficit and debt list. So you've got to cut your spending. And we're now going to get people who are going to increase that spending. Then you move into the spreads widening. Then you move into the potential currency crisis. In other words, the redenomination crisis. Now, the European Union has got a lovely instrument called a TPI, which is intended to stop anything nasty happening which would cause the spreads to widen. But they're only allowed to use that TPI if the cause of the widening of the spreads is not the fault of the country concerned. I see it as very difficult for the ECB to make that case if you were to have this sort of widening of spreads, because it's most certainly the fault of the French themselves. If they did intervene using the TPI to kind of clamp down on the widening of the spreads, then I think it is the euro and the ECB's credibility that will be called into question.
When we had the Eurozone debt crisis, and we had countries like Greece defaulting on their debt, the threats from the EU and the ECB was to eject them from the euro. But you couldn't possibly eject France from the euro, could you, without bringing down the whole currency sort of regime?
Well, that's like ejecting you from yourselves, or me from myself. I mean, it's an existential Samuel Beckett issue, but it's not going to happen. No, what you get is a very weak currency.
So would you be a seller
of the currency?
Would you be a seller of European assets?
I
the euro?
would imagine, yes. I think the euro is going to go in the next 12, 18 months well below parity to the US dollar, which does not, incidentally, come up with the standard Brit forecast of the demise of the euro, the revival of the UK and the empire, and a few other things. There's nothing to do with that. It's to do with the fact that I really think this is a very critical election, and it refocuses key players on their own domestic schmozzle at a time when they should really be focused on what needs to be done in the EU to reverse the economic and geopolitical decline. It's not a forecast of the end of the currency. It's a forecast of a weak currency.
Mark, should we be concerned out here about what's going on in France? Are there ripple effects?
Sure. I mean, we're very, very, very close to Europe and the EU, and France is a key part of that, and of course a major trading partner, and is very active in Asia, both in a business sense and political sense. And Macron has been in particular. I have no idea what a new government would do. Maybe David or Barry does in France in terms of its international stance, other than Europe. Europe, that's a worry as well. But in terms of Asia, I don't know if they even have much of a history. I've seen the reporting too that there seems to be. It seems Le Pen is favored to some extent over the left, which is considered more extreme. So she and her party are looked on as moderates, relatively speaking, which also would seem to be quite worrying to me.
So why do you think Marine Le Pen is the idea of a government with a prime minister from her party alludes so much horror in it? Because if you look at Italy, they've got an extreme right-wing prime minister, haven't they? Extreme right-wing government, but they haven't particularly been that extreme economically so far. They've actually governed in not too bad a way, or at least a reasonably moderate way. So is it going to be such a bad thing? I mean, I heard a French voter say, everything else we've tried hasn't worked, so let's give them a chance.
Yeah, I'm sure that's
a nice idea. I mean, and Marine Le Pen wants to become Meloni. That's the aim. So she's cut out saying racist things, and she's said civilized things. But I'll tell you why it doesn't work. It doesn't work because it is not so much the 2% of GDP, out of a $2 trillion GDP is a huge thing. It is because there are so many things in France, which is a country with no productivity, no growth for 5 years. There are so many things that need to be done, and they are the mirror image of what needs to be done at the level of the European Union, European community. And if they are not done, it's not that they spent a bit more money. It is that they are simply not interested in complying with the ECB or with the EU declaration stipulations. They want to be La France. Okay. And if that's going to be the focus of events, the things that need to be done will not be done at the level of France and at the level of the European Union. So you enter complete stagnation. And the French are not very good at stagnation because, unlike the British, who put on the bowler hat and button up their Etonian collars and get on the non-functioning bus system, the French get out in the street.
Yeah, that's what I was going to say too. I think that's a worry, and the government looks like it's likely to be led by a 28-year-old prime minister. Right?
Yes, I don't know if you spent any time listening to him, but I mean, golly, if you talk about European politics or any politics being based on individuals who are marketing packages rather than substance, la forme, mais pas le fond, as we say in French, that's a very clear example.
Yeah.
But David, isn't it true that Germany has been in stagnation as well? There's been very little productivity growth in Germany, even going back into the last year or two of Merkel.
I'm the persuaded. I mean, it's been a disaster story. They left their economy dependent on two things, which are now shafting them. One was making cars in China, where they can't even make good cars in China. In the EV race, they're somewhere behind the trunk of the cars. That's one problem they've got. The other problem is they based even making them on cheap Russian energy. So, I mean, and what are they doing about it? Because they are totally paralyzed. You have a completely incompetent government, which you cannot change until the government decides to change itself, which it won't.
Well, you're talking about countries where there's been no productivity, no economic growth. What about the UK? Productivity growth there is zero. The economy there is completely stagnated. The only difference I see here, maybe from what's going on in France, is that rather than the voters turfing out a centrist party, they are going to turf them out. It seems that the Conservatives have abandoned altogether any idea of being a sort of consensual centrist party. So it seems, doesn't it, that the only issue here in the UK election is going to be just how big a majority the Labour Party gets here and what's it going to do with it?
Well, I think the Labour Party will get in, but it's not really a love affair of the electorate with the Labour Party. They don't like the Conservatives. They're going to demonstrate that in pretty historically extreme terms, but they really don't like Labour either. They like kind of weird people like Big Mouth Lafarge, who, like Donald Trump, is not renowned for his reading of history. But where does that leave you? It leaves you with an unloved Labour government, which is in power for 4 years and then another 4 years, which in the beginning will look like Blairite, and in the end will go back to looking Corbynite. Because if a left-wing government is stable and has really no effective opposition, you can be perfectly sure that the Marxist ideologues will crawl out of the woodwork ere long, and the policy will start to shift back to the rail tracks which lead to that period of Eastern European history. That's what's going to happen. But the beginning will be a Labour government massively in control, partly thanks to the voting system, and that control will give it power, but it will act in a very moderate sort of way. It will not attack the national health problems in any revolutionary way. It will not attack the scandalously inegalitarian education system in any way, and it will leave defense, thank God, because that means Ukraine alone for the moment. But as it gets complacent, then so it will get more adventuresome, and there will be it will drift off to the left.
Barry, a sort of a philosophical question for you. What is it you think that's turning voters off all around the world, in France, the US, the UK, from sort of middle ground centre parties to get the voters to start flirting with the extremes, whether it be the extreme right wing, like you see in France with Marine Le Pen's party, whether it be the extreme left wing? What is it that's putting people off sort of the centre parties?
Peter, I don't have a clue. It's an excellent question. But look, people are living so well, even in India, certainly all over Europe, including the UK, and certainly including Eastern Europe. So, you want to say, what's the problem? And I don't have an answer.
Because even in the US, where there's no question the economy has done extraordinarily well over the last couple of years during the Biden presidency, he's getting no credit for it whatsoever, is he? People just don't seem to feel better off. They feel disgruntled, discouraged, which is why they're turning to people like Donald Trump, or why in the UK they turn to Nigel Farage.
Yeah, I think in the US it's inflation. You never think of inflation as a lagging indicator, but it's at the grocery store. It's in the restaurants. It's in the prices of most things. And so that might be 2 years ago story, but that's what people are thinking about.
Okay. Let's talk quickly about one of the other issues that we came up, you mentioned earlier. China wants the EU to scrap its planned higher EV tariffs. These are the provisional duties of 38.1% on Chinese EV imports into Europe, which are set to take effect by July the 4th. China's Commerce Minister and the European Commission have agreed to hold discussions on the matter. Beijing wants the EU to adhere to world trade rules and revoke these tariffs before July the 4th. That was according to the Global Times on Sunday, which they say will benefit both sides. Mark, I suppose, good thing, isn't it? At least the two sides are agreeing to hold consultations. But if this is going to get anywhere, something's got to give, hasn't it? Either the EU has got to back down on these tariffs, or China has got to do something about its large amount of exports.
Yeah, clearly. I mean, as you suggested, we're glad they're talking, I think. And that's something, because it's better than maybe the U.S. and China, who are not are talking about some things, but not other things. But they're in an intractable position. And of course, China's getting internal pressure from their car companies to put tariffs on the Europeans as well on some of their cars. Obviously, that's self-serving, but you can understand the pressures there. Is the government in a position to move quickly on dealing with what's clearly overcapacity, even though they won't admit it? I'm not confident of that. When you look at, unfortunately, when you look at the Chinese government approach to various economic issues, including property and other things we've discussed for some time, they've been very cautious. And this is the time to, I think, to think about what you're doing, but also to be a little forceful in some areas, and it doesn't look like they're going to do it. So I suspect they're going to try to muddle through, and I hope I'm wrong. And I'm not sure if they're going to end up muddling successfully.
The problem is these tariffs just roll on and on, don't they? Because the US put 100% tariffs on Chinese EV vehicle manufacturers, the EU felt they had to do something as well. And now because the US and the EU have done something, Canada's now considering tariffs as well under pressure from its automakers. And so it goes on.
That's domestic politics, of course. Trudeau is in so much.
This is a very, very big deal. And I think it's going to get worse. This study from the Center for Strategic and International Studies in Washington, $231 billion Chinese aggregate subsidies for electric vehicles.
Yeah.
I did the math, might be wrong, about the United States subsidies. The United States has roughly 2.5 million electric vehicles on the road. Almost all of them are made in the States, so they're eligible for subsidies. The subsidies seem to be about $7,000 per car in a tax rebate. It's a different kind of tax incentive. Well, you multiply that, you get 17 billion. So let's say the United States is subsidizing EVs to the tune of $17 billion, while the Chinese are doing factors of more than 10 times that. Something has to give. The Chinese are on the back foot. They'll have to give on this one because this involves millions of jobs, Europe, North America.
Well, it'll be interesting to see how this develops if Trump wins the election, because he doesn't believe in EVs at all. And so he probably won't be any subsidies. And then, how does this really mess up the market? And of course, and Canada's in a tough position domestically, politically, and for other reasons too. So I agree with Barry. I think it's going to get worse before it gets better.
I think, if I may, differ slightly on only one front, which is the European front.
Yeah.
And the reason I say this is because I think the Europeans want to get to a managed Chinese EV flow made in Europe by Chinese companies rather than open conflict. Now, let me say why. Number one is because the tariffs come out of the European Commission. The Germans had to approve what the European Commission did. But the Germans are saying, ahead of everybody else, let's sit down and talk. There are obvious reasons for that. They make big, heavy, out-of-date cars in China. And if these tariffs come in on European vehicles coming into, on EVs coming into Europe from China, then target number one for the Chinese will be the German dinosaurs. Okay, so that's the politics. Now, take two hypotheses. Number one is that no Chinese cars, EVs, come into Europe. Then we in Europe do not meet our climate goals. End of story. Because our domestic producers can't do it. And then let us take the other hypothesis, which is that China is given free rein to introduce, to sell EVs in Europe. Mm-hmm. In those circumstances, we meet our climate goals, but we no longer have a car industry. And the workers...
Yes.
Okay. Now, I these are extreme and, as usual, in my sort of analysis, more comic than real pose. Priscilla and Charybdis. What the EU is trying to do is to steer between them so that we allow the Chinese to sell lots of EVs in Europe, but we stick Renault or Fiat on the hood of the car, and they make them in Europe, and we get the technology. That is where they're trying to go. Now, of course, they're not going to say that because that's going to raise, particularly if you get a nationalist, kind of Rassemblement National government in France, they're going to discover China. I presume somebody will give them a map, and then they will decide that China they're going to want. Okay, so we're not going to have anything from China. So the EU is caught under the threat of populism domestically, the need to have the whole Chinese supply chain move to Europe so that we get that works very well for climate goals and car production, and the need not to allow the Chinese to come to Europe in such a way as they decimate the domestic car producers. That, I think, is why they have shifted to the policy of let's sit down and talk. And it differentiates the EU from the US policy, which is all about grey zone warfare.
So where is the compromise? Because China's got to give something here, hasn't it? And the problem is, of course, it doesn't want to do it without admitting it was wrong, or it's got its industrial policy wrong. But maybe is there a way in which they could agree to some sort of voluntary export controls and open more plants in Europe?
And they most of all, they'll agree to expatriate production and the production chain, supply chain, from mining to batteries to cathodes to cars to Europe or Morocco or wherever. So it will be a kind of, they will never say we got something wrong. They will say, look, we are really, really good. We're helping Europe develop and because of its backwardness, we're helping them avoid a major crisis, blah, blah, blah. That's where I think we go, or try to go.
That's the way, at least if they're allowed to. If the Chinese are allowed to come in, I mean, in Europe, you know better than I, David, they probably will. In the U.S., they wouldn't be. But what they're not going to do is I'm afraid, is do anything much to try to reduce the number of players in China, at least in the short term. And that's a problem. But if they're able to move some of the production outward, which is, of course, a model followed by some of their predecessors, like the Japanese and Koreans in the past, that would have an impact. But from what David just said, I feel a lot more sanguine or comfortable about Europe than I do about the other players involved in these in the EV battles.
So, Barry, this is a very different approach from the US, isn't it, where the Biden administration doesn't want Chinese EVs being sold in the country at all, partly because it thinks they're full of antennae that are going to collect data and send it all back to Beijing. But they also don't seem to want Chinese investment either into the domestic industry. So very, very different approach.
Very different approach. I agree with Mark that this debate is going to include China. I don't think these two candidates on Thursday night can avoid it, but their policies are more similar than dissimilar.
Yeah.
If anything, Trump says Biden's not going far enough, doesn't he? He says, you haven't, the tariffs aren't high enough, and they should be more expansive and include more products.
Yeah.
So we'll hear on Thursday. Well, look, very interesting discussion this morning. Thank you very much indeed for that. You heard Barry Wood, who's our US economics correspondent over in Washington, D.C., David Roche, who's president and global strategist at Independent Strategy, and Mark Michelson, who's chairman of the Asia CEO Forum at OMA Asia.
You're listening to Peter Lewis's Money Talk.
Money Talk.
Thank you for listening to Money Talk this morning. You can find more business and finance information from around Asia in my daily newsletter, which is at peterlewismoneytalk.substack.com. I'll be back tomorrow when I'll be joined on the show by Louisa Fock, China equity strategist at Bank of Singapore, and Carlos Casanova, senior Asia economist at UBP. And with a view from Japan is Tokyo-based journalist and author William Pesic. Have a great day.
Money Talk